Hello everyone, welcome back to my channel. So my name is Shovik and today in this video I'll be talking about an important concept that affects our economy and our investment, the concept of index. Before starting the video, let's talk about the differentiation between index and indices, as you will get this term used several times in this video. So what is an index? When we say about an index, we refer to a specific list or catalog. But when we say about an indices, we refer to multiple such list or catalog. So in this video, we'll be discussing about what is index, popular indices of India, how is index calculated, why is index important, discussion on index derivative products. So without wasting any time, let's get started with the video, guys. So the first question is, what is an index? So an index is a statistical measure that represents the performance of group of stocks or securities. It is like a barometer for the market, giving us a general idea of how the market is performing. So now let's answer the second question, popular indices of India. So in India we have several indices, but most popular ones are BSE Sensex and NSE Nifty. So Sensex consists of top 30 companies that are financially sound, whereas NSE Nifty 50 consists of top 50 companies. In terms of weightage of the Nifty index, financial services holds a weightage of 38.03%, IT holds a weightage of 16.77%, oil and gas holds a weightage of 11.78%, consumer goods holds a weightage of 11.49%. So now let's talk about how is an index calculated. An index is calculated using a method known as free float. Say for example, our YouTube channel holdinmarket is a company and we have total 50,000 shares available, out of which 30,000 are held privately and the rest 20,000 are held publicly. So the rest 20,000 which are held publicly can be traded in the share market. So that share is known as free float. So let's understand this example in a more elaborate manner. For example, consider a company with 50,000 outstanding shares, each priced at Rs 10. From this, 27,000 shares are held publicly, while the remaining 23,000 shares are owned privately. The market capitalization would be 50,000 into 10, which is 5 lakh, while the free float market capitalization would be 27,000 into 10, 2,70,000. So why is indices important? It is important because it acts as a benchmark to measure the performance of portfolio of individual investors as well as the portfolio of mutual funds. It also acts as a barometer for showing the economy's performance as well as showing the general idea of how the economy is performing. Always remember, investing in stock market involves risk, so do your own research or consult a financial advisor before investing. That's it for today's video. I hope you enjoyed the video. If you have any questions, please leave them in the comment section below. Don't forget to like, share and subscribe the channel. So see you in the next video. Till then, stay tuned.